Welcome, Auvorians. Steve Vetterl behind the mic, trying to do a quality job. And looks like it's automatically typing up my info. It's kind of cute. All right, so let's do a quick. Let me actually stop sharing the screen because that is totally annoying. Let's try again. All right, let me open up the Q&A window. That, open up the chat window. Feel free to put your questions in the Q&A window. First, let's check, if you could please, in the chat. Can you guys hear me okay? Do I sound like a high quality dude on the mic? You go into the risk disclosure as well. Let's try again. New share, risk disclosure. There we go. It's pretty cool. I didn't realize you could have the bottom of your PowerPoint actually type your comments up while you're live. That's crazy cool. All right, trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry even higher level of risk that can lead to a complete loss of investment funds. Before deciding to trade the foreign exchange market using any of our software or alert products, you should carefully consider and diligently consider your investment objectives, level of experience, and risk tolerance. Most importantly, can you afford to lose the money? I don't know. Maybe I got a career in the auction market if I blow it at this job, right? So let's take a look at the next screen, and that is the calendar Forex. Let's share that. So I get this question a lot. If you click the filter button, get rid of the orange and yellow, even though they may be your favorite colors. You click apply, all the red shows up. These are the important folders that dictate all of the big news events globally. Most importantly, releases of performance, earnings, jobs numbers, which are Friday, obviously, in the US and Canada. And the most important part, in my opinion, for currency markets is the speaking of any central banker around the globe. So Fed Chairman Powell testifying today, tomorrow. It's all COVID-related stuff, but it is sending some waves through the dollar market. So as I have been prognosticating, and in some cases tangential on this subject, we are selling off in the dollar. Here is a daily chart of the dollar. This is just DXY for those of you who don't follow along. Pretty big move. So we haven't seen this in quite a while. For those that have not looked at this charts, if we take a look at a weekly, you can see how long it's been since we've been down in this level area, which looks like there's a little mini support line here, this orange line. Let me make sure I'm sharing this screen, by the way. You guys should see screen one of my charts. I have a tendency to start off in my gig and forget that I'm not sharing the charts. So let's do that. Okay, so been a little bit of time since we've been down in this area. I think related to probably what's being said here a little bit. Keep in mind that this is a 2-day testimony. It is CARES Act related, but there's a lot of stuff that could really potentially put some pressure on the markets. But obviously, Chair Powell is continuing to provide strong support. That really isn't, but essentially not saying they will not preemptively raise rates until we see actual inflation. Usually, if that is in fact the case, it would be too late, as they did many times in the early parts of the decade of 2000. The Fed was very slow to react, waiting for these things to, under Chairman Greenspan and Bernanke, it was a mess. So Jerome Powell's done a much better job, in my opinion. Although I think Ben Bernanke did a pretty good job, in all fairness. Very smart individual. In any case, that's the news. Is it charts? DXY. Let's take a look at the obvious extension up into a big area of breakout. Now, What you're seeing on this chart, which is the Euro US dollars, is each of these candles represents a single day. It's what they call a daily chart. This is one of the most important places, in my opinion, that I start my analysis on anything, looking at daily charts first. Now, I have overlaid the volume profile indicator on it. This is nothing more than an amalgamation or an aggregate, if you will, of all of the volume combined together over this particular data set, which is, if we highlight it here, essentially July of 2017 to now. So it's showing what's called the center point, or the point of control, is this red line right here that we broke from. So most of the volume, if volume in Forex can be trusted, and that's a big if, remember, it's whatever the 14 banks report as the liquidity providers to the broker in the aggregate, and we have to rely on that. It's not a centralized exchange where volume is executed on a particular exchange like NASDAQ, right, for a lot of the tech stocks, or New York Stock Exchange for a lot of the big board stuff, or, the futures markets, the CME, which is the only centralized exchange you can execute a futures contract on. So you can see the volume, right? The problem with Forex is it's fragmented. So this isn't really an indicator that, in my opinion, you're going to hang all your weight on for trading purposes, but it does provide some additional analysis for the purposes. And I'm going to adjust around all these colors and stuff to get it all sort of straight from what a lot of my volume profile stuff looks like from the old days, as my kids are sick of hearing this statement. When I used to do a lot of futures webinars and all the stuff I got on my YouTube channel, which is all still up there. So what do we take away from this? And how does it affect our trading and the decisions that we make trading? Well, as I said, when this broke, right, I would not personally be accepting shorts off the break. Okay. And you can see how this thing is just extended and run, I don't know, 1,400 pips from the break, right? Not directly, but close. So, it just depends upon, what's going on and all that stuff as far as the breakout. But from a risk standpoint, I teach all you guys this, and hopefully from just a real broad macro level first, because I want you to understand why I'm saying a particular thing. So for some of the software that's out there, that actually does the trades for you, obviously, that software has its own mind, it has its own artificial intelligence, but there are a big chunk of our subscribers out there that have the ability to accept a trade or not. Whether you're running Einstein, which is more, it takes the trades for you, or Alexander, which you can accept the trades, obviously. Same thing can be said with a Gearbox and Variable. So do know that while I was expecting, a little bit of time to pass, it's been, I don't know, 2 months now, trying to iron out some of the wrinkles we have in the systems. We're finally getting some solid footing out there, and being able to, from a technology standpoint. So on behalf of everybody in the virtual private server group, as well as our back office, all our tech guys, my hat's off to you. And for everybody out there in subscriber land, your patience has been exceptionally well received by the team. So we even though I have nothing to do with that, I feel important to communicate to that as far as what's going on, any changes or sudden notes that we need to continue to iron out. So if you're not following my Telegram channel, and you do want the link to follow it, you can set Telegram up on your phone, desktop, tablet, whatever. It's actually a really good communication system. It's one of the best out there. That's why there's 400 million users of it around the world. Let me know. I could post that in the chat window, or you can just go to the back office where all the notes are each weekend on all of my different videos I shoot. But the Saturday notes have all the links in there to Variable, Tyler's channel, which is Gearbox. It has Hassan's information, as well as all the links to my channel. We've been posting a lot of stuff in the Telegram channel related to getting the VPSs up and everything all ironed out. So, all right. more do I want to say on this subject? So euro breaking out. The problem with a breakout is you don't know how far it's going to extend. You don't know how long it's going to play out. It's difficult to really nothing more than just taking a look. The problem is we have to go way back to October, essentially of the 2018 to see kind of what's going on here, and the highs obviously all the way back, which essentially we rallied up into this 2500 area and we ran just a big range just between these two. I guess ultimately, if the dollar does genuinely sell off to that area, this 2500 area, the top of this range, is probably going to be a magnet for this currency. It's going to want to trade up there and see what happens. Probably corresponds to my dollar targets, which is down at 85. So if anybody has any questions on this, put it in the Q&A window. It's all pretty straightforward stuff. For those of you that are new at this, as I mentioned, just, sort of don't be concerned too much about whether or not you're getting this. This is a process of osmosis, in my opinion. So the more that you see this, the more you just Google something as simple as understanding candlestick charts and technical analysis. There's tons of videos out there on that. And at some point, I think what I'm going to do is, and I just don't know how I'm going to do it in format, because the list of me and the videos I'm shooting is just stacking up. But I'm going to do a video on Forex and macroeconomics from some of the sheets I've posted on the Telegram channel. I'm also going to do a video, but I think I need to do a video of just the basics of technical analysis, explaining the difference between the the green and red candles, red representing a down day, obviously green up, but also some of the support lines that are automatically put in here. And by the way, these are Dessan's lines. It's called the squeeze zone right here. This is an indicator that automatically puts support and resistance in based on a myriad of factors. It's actually pretty good stuff. Notice how these have been holding solid to these lines. And if we overlay some market profile on this, it gives us the point of control, which is the center point of where most of the volume had executed at price points over whatever measure of time, in this case, a little bit more than 2 years. So let me double check one other thing. All right, so GBP USD, let's switch back to the daily. Again, we're seeing the same thing take place as we broke out, as the dollar selling off, going up. I don't have an overlay on this, but I would assume the 35-ish, I should say the 3,500 area is going to be the magnet for this. Probably going to test that up there. And we could go there pretty quickly, pretty fast, essentially right up into this area, which is the top of the previous. And understand why I always will set an idea of where I think a price could go on anything, is because oftentimes if you spent a considerable amount of time balancing in a given area, it makes the breakouts that much more solid, if you will, as far as a chart pattern, right? And especially with the DXY, we've spent a really good amount of time, 5 months, balancing in a very tight area before it just broke under 92. And now it's down chasing stops and trading lower. So consequently, everything on the other side of the equation is going to be going up. Now notice, if we're looking at dollar yen, which I don't spend as much time on, still inside downtrend. It's been a pretty perfect format of these green lines, lime green, representing the trend down channel that it's been in and as soon as it's gone down and touched the top of the channel. So it's been pretty solid as far as a daily chart in showing where everything's going. Again, euro's lifting, right? So obviously yen's going to be weaker on this pair just because of the dollar. This is what I like to call pin action, meaning that it's going down in value as the euro lifts, but that isn't as much related to the euro's movement. It is just the dollar selling off and the euro lifting up in other pairs, right? So always understand the correlations between the markets and the currencies that they represent. Not as much can be taken, obviously, from an equity markets in terms of correlations of stocks to the underlying currency of that country. But I mean, in all fairness, if you have a main currency, which is the dollar selling off, it just makes sense that most of the majors, especially cable, the British pound essentially, and or the euro, are going to lift on that news, and everything else will take its cue in some cases from there. To a lesser degree, the Canadian dollar, so forth. All right. Anybody have any questions on? I'm probably going to shoot myself in the foot here. Has everybody got their VPS straightened out? You can give me a yes, and everything's cool there. If it isn't, make sure that you're just going through and putting a ticket in. Again, and anything that's out of the ordinary, a lot of times can be solved by just rebooting your VPS. I know that can be a kind of a simple thing, and that could also be difficult for some to do. But if you open up a ticket, that'll help the team get everything in the back. And you guys could do your part as far as communicating this to, because I know almost everybody listening to the call can probably think of 2 or 3 names that you could probably shoot a text to that is not paying attention to this stuff. So, which I totally do not recommend, but I get it. Everybody's got stuff to do. So, communicate it to them, give them a call, text, say, hey, make sure you got, everything's up and running, copacetic as far as your systems. Other than that, it's really all I got, guys. So just know also, I don't know how much this is going to benefit anybody, just honestly, but this is the Investor Expo. This guy's sort of working in tandem with Trader Expo. This guy's been bugging me for about a year to be one of their speakers. So I'm going to be one of the December 3rd speakers, along with a couple other guys. I think I'll be the only one talking about Forex. Typically in these events, I'll usually come in and talk about, just the futures markets, different ways to analyze it, stuff like that. But this time I'm going to talk about something different, and it's going to focus mostly on using Forex and or our products to add diversification to the portfolio. And also for a lot of the manual traders out there that just have a huge problem with not knowing, how to sort of teach yourself to manually trade. Using our products obviously takes a huge chunk of that learning curve out for you and will give you direction in exactly what to do. So if anybody wants to see this, I can get the link for you and put it on my Telegram channel. I don't have the link just ready just yet. They're switching over a few things because unfortunately this event is being done online in my least favorite software, which is called GoToWebinar. Boo. So that's it. I don't have anything. I will, the squeeze zone indicator, let me show that here. Guys, just go into indicators. Let's see if you can see the screen. Let me just make sure I'm sharing the screen. There we go. Squeeze zone indicator, just go in here and search for it. Okay. I'll pop this window up, type in squeeze zone. Okay, you'll see it. Anytime you see empirical FX, that's Desant's tag in TradingView. Mine's just AP, by the way. Cool. Look at the GU chart. Elaborate, please, Martin. GU. Elaborate, brother. What's GU? I'm feeling stupid now. What's GU? Ah, we just looked at that. Were you not with us, my man? Were you off in space? Here it is. So daily chart, British pound. Ah, that's okay. We'll only tar and fill you in the public forums only, Martin, but it's all good. So here, British pound, obviously it's lifting above a big area of support, just like the euro. This is a very similar chart, by the way. Pretty decent amount of time spent basing in a fairly wide range from just under 2,700 all the way up to its current level, essentially the 3425 area. So this thing's probably going to be going to, just scroll the chart back, probably going to be more of a magnet into the 35,100 area. Buck 35 100s. That's what I'm looking for. So, as we begin to, in many cases, which it looks like it's with the euro, just absolutely completely catapult into that higher area, the win rates on longs, on pullbacks, are going to be better than shorts, right? Now, I could be wrong, but typically that's the case. So just understand from a win rate perspective, taking shorts on stuff like this, so what I call stepping in front of the freight train as soon as the first breakout takes. Notice just like with the dollar, you probably had a lot of knuckleheads out there in institutional land trading for big banks. Some of their junior guys are the more crappier discretionary traders out there, but they got to execute these trades. They're out there buying the dollar right under 92, and they're just getting tortured down here and having to cover, which is facilitating sell orders and pushing down the currency at this point. Do we know how much of a retracement EU would need for Alexander to get out of a sell sequence? That is going to be almost 100% dependent upon what is the range of that sequence. Okay. So 7-8 levels deep on Alex, right? So what if that's spread out over 1,000 pips? Daily chart seems a bit extreme as an example, but the answer is that those the 5, 6, 7, and in some cases the 8th level, depending on the software, those trades are going to be significantly larger in size because we're getting that rubber band stretched out on the standard deviation, which is just nothing more than a set of bands like a Bollinger Bands that run outside of the currencies. Just like here, you probably have a lot of the bands are running right in here and they're upper. So as things get stretched out and start tagging what's called a first standard deviation on the bands, I don't have those on the chart. At some point I'll put that on, but I think everybody's head's spinning enough with all the indicators I have on there already. Those would be ways to understand how it would move. But it's going to depend upon the range of the sequence. And that's the case in any trades, right? If you're buying Apple computer at, make up a number, 100, 102, 105, right? And then all of a sudden it's going down on you. Maybe the, it has a whole bunch short at the top. The stock's going to have to travel a full 10 points to get you out of most of the drawdown, even though you're still in loss on some of those early trades. The ones up towards the top, if you're shorting on this particular example, are going to be significantly larger in size. And that's why it's critical to, especially if you're running live money, make sure you run a demo first for a good period of time. In addition to that, trade size and lot size on live money that you're running should be well within the parameters of what we call our conservative settings, which I've talked about ad nauseum over the last 5 months. Hopefully that answers the question. Other than that, all right, guys, I'm out. Any questions, let me know. You can always send me an email, sfederal@AuvoriaPrime.com. I wish everybody well this week. May the trades be with you.